of Startup REI Show, the number one real estate investing show for angel investors, startup founders, and venture capitalists. If you haven't done so already, please check out startupreishow.com. I actually have a guest on board, and his name is Jack Miller. I'll have him on right now. Hey, Jack. How you doing?
Fantastic. How are you?
I am doing amazing. Glad to have you on. If you can, please give us like a small introduction of what you do now, and yeah.
So, we are in the commercial real estate business as lenders, private portfolio lenders,
Yeah.
and as investors. We supply capital to real estate investors who want to buy real estate. So, we effectively look for people all over the country and partner up with them and provide them the capital they need to buy real estate, and we get a piece of the action, so to speak. It's a way for us to deploy capital and make a partner up with a lot of fantastic people.
Perfect, perfect. Great to hear that. Thanks for the introduction. And for the most people that are in the audience, they are tuned in as a startup founder or a angel investor or VC. So learning more from from the commercial lending and commercial capital provider as you are is would be great to us. At the deepest core, outside of all that you do, I want to ask, why is it that you do what you do?
I'm very lucky. I've always loved what I've done. I'm 59 and I started when I was about 18. It's hard to believe I've been doing it for 40 years
Wow.
and survived all the economic ups and downs and cycles. But I really love real estate, everything about it. And the finance business is tremendously exciting to me. I don't really have any hobbies. I don't play golf. I don't play tennis. I don't watch sports. I love deals. So for me, I find it tremendously exciting, but I also love to work with people and help people. And because we have a national platform, we get to partner up and provide capital to people all over the country
Right.
who are all of them are smarter than me and they're finding deals. And it's just it's tremendously invigorating to be able to speak to people all day long about deals
Yeah.
in all kinds of regions, in all kinds of economies.
That is great to hear. And I think the aspect of just willingness to partner up with people and actually give back, get your piece of the pie, and then literally just relationship first, and then win to win, win
You
to
know,
win.
it's unbelievable, and this is really so startling, or so not startling. It's shocking to most people. We're non-bank lenders, so people come to us for bridge financing or other financing, and self-understood, we're probably 2 or 3 times higher than a bank. But our borrowers are so grateful because we're providing them the capital that they need to take advantage of opportunities quickly. They're making money with our capital. So they're so grateful and such a pleasure to work with. And the amount of thank yous we get literally on a daily basis is just overwhelming them because, again, we're providing them the capital they need to really pursue their dream. So it's just fantastic.
Can you talk a little bit more about the non-bank commercial and investment lending?
Yeah, we're private portfolio lenders. So, if people are coming to us, either they need to, we're a lot more expensive. So here's the two sides of the coin.
Yeah.
We're very quick. We can approve a loan, and most of our deals, whether it be debt or equity, are approved within minutes or hours. Two of my sons are in the business. I have a head of underwriter who's been with me for years. So you're always going to speak to a decision maker, and we'll let you know right away what we can do, what our terms are. We'll work it out. We'll put it in writing. You'll get a full approval within an hour or two, and we often close within days, sometimes a week or two. And we're flexible. We're looking at the property and the prospect, not the individual credit or things like that. But we're more expensive. If you can go to a bank and you have the time frame and you can wait the 2 or 3 or 4 months and deal with all the paperwork and all of that, you're going to get a much better deal. So
Right.
people are coming to us for speed or access to capital.
Got it. Got it. Got it. Okay. In that regard, actually, that's actually an amazing thing where you have speed in the actual transactions and the momentum and velocity of you to make money and make your dream happen is faster as opposed to these traditional banks. Can you talk a little bit more about your deal due diligence, what you look for, what deals, deal sizes, and maybe how much capital you put into deals?
Yeah, sure. So for us, we focus on the smaller end of the spectrum. So we're doing deals under 5 million, from 100,000 to 5 million.
Okay.
For us, a $3 million deal is a big deal. So we come in. We're not friends and family, but we're not institutional capital. So if you want to borrow or have invested 10, 15, 20 million or more, you're going to go to it's institutional capital. We're
Yeah.
not institutional capital, but we're not family and friends. So we're sort of an in between. Is where we fit in the marketplace, and the deals that we do are we don't. It's easier to say what we don't do. We're doing that, or we do value add
Okay.
and stabilize. We don't do ground up and construction,
Mm-hmm. Mm-hmm.
but we do a lot of value add stuff. And the due diligence is just common due diligence. We're not appraisal driven or things like that. We can look at a property, any property, anywhere in the country, and we can tell pretty closely what the value is. So
Correct.
we're focusing laser focused on the property, not so much the individual.
Oh, okay, okay. In a typical value add, if for a passive investor in a syndication at least, most of the time, and even in like the IPO world, most of the time it goes by the order of you look at the team first, the market, and then the deal. So for you, it's literally the deal first, and then the market, and then the team. Is that correct?
That's correct.
Yeah.
Yeah, that's correct. We're looking at the real estate. Ultimately, the real estate is going to pay us back.
And
So we're looking at the real estate. Now, having said that, if someone doesn't have the experience in a particular sector,
correct.
we happen to have the in-house experience in most sectors. So we still will do the deal. We just may say to that person, hey, let's do it with you because
Correct.
we have the experience.
Right, right, right. Okay, okay. And so, in your end, not only as a commercial lender, but also as a passive investor yourself, how do you maintain and protect the downside with either any of the investments that you make?
That's a great question. And, we're at a period now where, we're just beginning an inflationary period. I'm
Correct.
guessing most of your listeners don't know they haven't lived through inflation. They haven't lived through increased interest rate environment.
No.
I'm sort of much older than you. I started when rates were 15 and three quarters. And I started in a high interest rate environment and an inflationary environment. Most people only live through good times. People don't know what it is. So
Yeah.
everything we do, the cornerstone of the company,
Yes.
is been how do we protect our downside?
Hmm.
And you just have to be more conservative in every aspect of the deal. Most deals right now, the past couple of years, are priced to perfection. And that's great as long as things are great. But when things stop being great, it can be a disaster.
Got it. Got it. Got it. So, how would you, as a passive investor, best prepare yourself for economic downturn or economic correction here?
Well, I think let's start at the deal level, and then we can get to a passive investor. At the deal
Okay.
level, we're a believer in low leverage and
Yeah.
big cash reserves. If you have low leverage and big cash reserves, you can withstand the down times and vacancies, and you can withstand a lot. The problem with most deals today, they're almost 100% leveraged,
Yes.
and their cash reserves are very low. So we're exact opposite of where the marketplace is today in our beliefs. And I'm just a believer. Everything's great until it's not. And when it's not,
Yeah.
you can't look back and say, "Oh, I wish I would have had lower leverage."
Right, right, right. Okay, that makes sense. Can you talk a bit more about your passive investing experience? And
Well, we have a tremendous amount. We've been investors for, like I say, 40 years. So in fact, one of the things we do is we purchase and we lend on LP and GP positions. So
well,
as a result of the financial crisis of '08 to 11, it became very clear to us that a lot of people had LP pieces or GP pieces that they had invested in, but and on their balance sheet it looked great, but they had no cash. And the problem with the real estate business is You could have a balance sheet that you have $100 million in equity, but if
Yeah.
you don't have any cash and you need cash, what are you going to do? So we started lending. We started buying LP fractionalized LP and GP pieces as well as lending on them. So we've created a secondary market for people who have passive investments. If they want to either borrow money on them or if they want to sell them, we're certainly buyers or we're lenders on them.
Whoa, that's the first time I've ever heard of that. That is amazing. How is
Yeah,
that structured coming in as a LP that would want to, let's say, borrow $100,000 that's invested in a particular deal?
think about it this way. Our typical client, a guy puts up a Walgreens or a shopping center, and
Mhm.
maybe let's say it's a $4 million deal, and he raises $1 million LP money. He has 10 people put up 100 grand each.
Yeah.
The LP investor is back of the bus. It
Yep.
could be the best deal in the world, but unless the GP one causes a liquidity event,
Correct.
how's he getting his money back? He's getting his 5, 6, 7, 8% annually or whatever it is, but he doesn't have a way to really monetize it. We'll go in and we'll buy that piece from him. We'll buy that LP piece, or we'll lend him or her money on it.
What's the incentive for you as a commercial lender if you were to essentially replace the GP team, for example, in their position? Just interest rate, or I'm
No,
trying to.
it's the deal. We're underwriting the deal like any deal. So sort of instead of buying a whole, let's just say it's on a shopping center or an apartment building. Instead of buying the whole shopping center, we're buying a 10% piece, or we're buying a GP piece, or we've lent people money on waterfall pieces. A lot of these deals have waterfall pieces,
Correct.
and the waterfalls can be very profitable for the GP, but sometimes it takes years for them to get that money,
Five
and
to
they need the
seven.
liquidity for another deal or to eat.
Correct.
So, so we'll either buy it from them or lend them money on
I've been hearing that inflation is a hedge for. Um, oh, sorry. Real estate is the hedge for inflation. Can you talk a little bit more about that? As with your hat with as an investor.
Yeah, real estate's a real estate, first of all, is a tremendous investment for a lot of reasons, but it's a tremendous hedge. Think about this. You buy a property today at market. You're not buying it at a discount. You buy it at market and you take a 20-year debt on it. Okay. What do you what are rents have been going up? What do you figure rents have been going up? Just on average, pick a number.
We underwrite closer to 2%. Just
2%. Okay. So let's say 2%. Every year, the 2% compounds. Look at that at year 10 and at year 20. Okay. And it's the amount of rental increase you pick up is unbelievable. The amount of debt you're paying off is unbelievable at year 10 and 20.
correct.
So it's a tremendous, so you get every month, you're getting the 2% compounded. Remember that compounding factor, what do they say, this eighth miracle of the world or something like that, eighth wonder of the world? It is. And the ninth is debt payoff. Every month, your tenants are paying off your debt. So at the end of 20 years, if you buy $1 million property, it's unencumbered.
So
I did an example. I actually did a YouTube video on this exact topic. I said, let's assume you buy a property for $1 million, okay, at a 6 cap.
Yeah.
And I said, I think I figured you borrow at 75 LTV leverage point at a 4% rate. And I took a rents up 2% a year.
Yep.
And I showed the listener how that performs by doing, again, 2% low. You'll have years when you get 10 and 15% increases. But if you just take a 2% compounding a factor, what that looks like in year 10 and year 20. And it's unbelievable. The returns aren't that great the first year. Your cash on cash, I think, was 5 or 6% the first year, but in year 10, it was like like a 70% yield, and it just grows exponentially. So real estate, I don't know of any other investment that comes close to real estate in terms of safety, reliability, and hedge on inflation.
I cannot agree more.
Yeah, I wish I had that the graphs that I used on the YouTube, because it's exactly what you're talking about. Exactly what you're talking about. And you don't have to be a genius. You don't have to buy anything below market. Go out and buy a good quality piece of real estate that's going to go up in value, and forget about it. Here's the only rule you have to do is don't die. That's the number rule. You have to live. But if as long as you live, you'll make a fortune on it.
Talking about that, what is your perspective on buy and hold versus technically flipping value add properties every 5 years?
You know, look, I'm a buy and hold guy.
Yes.
Okay, but I've probably sold hundreds of properties over the years, because the reality is I had to raise a family,
Yeah.
and I had to eat, and I have 3 kids. Well, now they're men, but and everything's expensive. But
Correct.
I look back, and every property that I had sold, I wish I didn't sell.
Yeah.
So I'm a big believer in buy and hold and do it again, to the
It,
extent you can. The reality is, if you're doing this as a profession, you need to flip some to eat,
correct.
because
Correct.
it's hard to make a lot of money, or to make enough to support yourself buying and holding. You only feel that years later. In fact, it's funny.
Hmm.
I got involved in a deal in 2004,
Yeah.
and up until 2004, okay, up until about 4 years ago, 3, 4 years ago, I didn't make a penny, not one penny. I was involved with this deal for years, for over a decade. But once my cash flow started to kick in,
Yeah.
okay, it was the best thing in the world. It was better than anything else in the world.
I I do see that and I understand that. I'm still at the beginning stages of it not kicking in. So I'm in the stage of setting it up essentially. And
I feel I was at your pain point for a long, long time, a long, long time.
how
But
long did it take you until you get to that cash flow from 2004 until?
I'm guessing probably about 2018, give or
Wow.
take.
Wow. So from 2004 to 2018, how, well, I guess in that case, you planted the seeds around 2000 between the times, right?
We bought the property in right before the economy crashed.
Mm-hmm.
The plan was, we bought a value add shopping center.
Correct.
The plan was to turn it around and refinance it. Of course, we
Yes.
bought it, the market crashed. We couldn't refinance it. We couldn't rent it out. Our capital was tied up. Everything went wrong. I was under tremendous pressure. I had some partners in that. Let's sell, sell, sell. I said, no, let's. I don't want to sell. Let's hold it. Let's weather the storm. Weather the storm. And I said, if we weather the storm, at some point, this is going to be the best investment you guys ever made. They disagreed with me, but we weathered the storm,
Yes.
and the market turned. We leased. It became 100% occupied. When we bought it, I think it was like a $200,000 NOI. Now the NOI is over $1 million last year, 2021. The debt is almost non-existent. It took us years to
Yeah.
turn it around and pay off the debt. And then when the debt was paid off, I had to pay off my LPs. So my
Correct.
piece kicked in at the end.
Yes.
But for wait, and I didn't make anything during that time. But the value of the property is an absolute fortune now. And all someone has to do is buy one of these in their lifetime, and they can retire off it. Just have one of these deals in their lifetime, and it's enough money to retire on.
Got it. Got it. Okay.
So I preach, don't do one in a lifetime. You could do one a year, one every 6 months, whatever it is that you're comfortable with.
Talking about your preach, I think we need to talk more about this buy and hold strategy because as a GP myself, as a fund manager, if you will, most of the investors are in it for the cash flow. How do I find people that are not only big check writers as an LP, but also have the mindset of buy and hold? Because the audience is coming in from VC, essentially, the startup
Yeah,
realm. They have money, right? But how can I offer them that opportunity of literally doing a buy and hold strategy as the investment thesis? Is
I
that a
think
thing?
look, if I ran into some, let me rephrase it. If I ran into some young guy, good looking guy who was smart, I would tell him to present himself as an expert in a field
Yes.
and look for investors of like mind and be very clear with them. You're looking to build generational wealth. You're a buy and hold guy. You don't buy into the market of every 2 years you flip the money. Maybe it'll happen, and there's plenty of deals it'll happen on. But in your dream world, you want this to be a 30-year, 40-year, 50-year hold. And I think it's sort of like, I hate to say it, the classic example of Warren Buffett. He
Yeah.
resisted splitting that stock for years because he said he didn't want the investors who were transactional. He wanted the 20, 30, 40-year investors. I have to tell you, they're out there. You have to open up your mind and look for them and be very clear. Investors come to me because they know of the track record. I'm almost evangelical about how we preach our track record. I say, I
Correct.
can predict the market. People, what's Ukraine going to do to the market? If the Fed raised the rates 0.25%, 0.5%, 200 basis points? What's going to happen? How can I time the market? Well, really, how the hell am I supposed to know all this stuff? No one knows. Anyone who says they know, they're full of it. But I do know I'm very bullish on America. I'm bullish on the increased population. And I know if I buy a good solid piece of real estate today, give or take in 20 years, that's going to be double, triple, quadruple in value. And I say to people, what did your parents pay for their first home? And I say, what did they sell it for? So give you an example. My parents paid $19,000 for the home I grew up in.
Correct.
I think they sold it for $275,000. So
Yeah.
the truth is, what was the difference if they would have paid $19,000 or $17,000 or $23,000?
A lot.
You know what I mean?
Yeah.
So if you buy a good real estate, you hold it for the long time. I predict investors will come flocking to you. Flocking, not coming to you, they'll come flocking to you because everyone else is get in, get out, time the market.
Yeah.
Everyone else is feeding them to death. And you got to tell them real estate is everyone thinks real estate's a quick get rich thing. It's not a quick get rich. In fact, I have 2 signs on my door in my office. Before you come in, one of them says get rich slow, and another one says a company grows as fast as its cash flows. So you got to keep cash flowing. So I believe that if you tell them your plan is to buy and hold, you may sell. We're all opportunists. So if the right opportunity, you may sell, but be in for the long haul.
That is a tough sell. I at least maybe it's a limiting belief for me because it's very rare to find people that are buying and holding, and most of the people and most of the deals are flipping within 5 to 7 years in syndication. And so, okay.
So my comment to that, when people say that, I said, well, what happens if the market stops going up? The deals, here's the reality. Okay, if you want to talk the reality, and this is 2022. Everyone is a hero for the last 7-8 years.
Yeah.
Okay, all these heroes, the economy made them a hero. They're not heroes. Anyone who did it was a hero. As long as you're not a total nudnik, you're a hero. You know what I mean? But the test of a good GP operator is whether they can withstand a market that's not priced to perfection.
Yeah.
When rates are coming down and rents are going up and you have the Fed pumping in so much money, it's easy. But, go back and see how many people made it through the last economic downturn. It's funny. I was at a real estate conference right before COVID started. I was speaking, and it dawned on me on like the second or third day, and let's say there were 200-300 people there. I don't know. 2 things dawned on me. One of them is I was almost the oldest guy in the room.
Yeah.
Everyone was in their 20s and 30s.
Yeah.
And when I started, I was that young. And the other thing that dawned on me that almost no one, and I'm exaggerating, there was 5 or 10% of the people my generation
Correct.
had survived the last financial crisis. Nobody went through tough times. Everyone came in the market after 2011.
Right. Usually after 2012 because of the Jobs Act, and that's right. That's where syndication got more popular from, like, usually richer families to do private equity, but now it's
Yeah, I would just look. I hear you. That's what people think, but the truth is, I don't know if you know the history of the Empire State Building, but the Empire State Building was built based on effectively
crowdfunding.
crowdfunding and syndications.
I did not know that.
uh, Google the history of the Empire State Building. Now, by the way, it has a very rich history. It went bankrupt a few times. Everything in the world that could have happened happened. But the reality is that was raised by a lot of, I don't want to say nickels and dimes, a lot of small money when it was built.
Correct, correct. Okay. I know, I believe at least there's a downturn coming. I want to prepare myself to do a buy and hold strategy with my LPs, if you will. Um, I'd rather wait. I know there's no such thing as timing, but that would probably be my investment thesis. What are your thoughts are on that?
I think it makes perfect sense. I don't know about the waiting part, but I think buying and holding, you can't go wrong.
Would you say you already said you're a buy and hold guy, but um, if the deal makes sense and the investment thesis makes sense to you, is that something you personally would probably invest in?
Buy and hold,
Yeah,
100%.
yeah. So literally, it'd be like if 2008 happened literally today, well, actually, in the next year, I would gather up more people to do buy and hold strategy, other LPs like yourself, and then
Well, the problem is in theory that works,
yeah,
but when that happens, everyone gets scared. It's sort of like people want to buy stocks when they're going up, but the time they should buy them is when they're going down. So right now there's so much capital in the market because the real estate looks like it's never going to stop.
correct,
But if you all of a sudden saw what, God forbid, see, and by the way, I think 2008 was a once in a lifetime,
correct, correct.
event. But if you see that again, what happens is the liquidity markets dried up because everyone was scared.
Yes,
So, but that was the exact time to be buying.
yeah, uh-huh, uh-huh, uh-huh. That's a hard thesis to sell.
I don't think so. I think I really don't. I think there's plenty of people who want long-term investing. Plenty of people are like-minded, and plenty of people. What I preach is a more conservative approach. Now, by the way, I have in our portfolio we have three. I think the number is three properties currently under agreement of sale for sale that are
Oh,
going to be sold.
yeah,
So I am a buy and hold guy, but when you get the right offer, we take it.
correct, correct.
So it's not like I'm going to die with this stuff. I may, but you have to be flexible. But we don't want to buy anything saying we're going to sell it in 2 3 years because again, people are very short-sighted on the history, and they're looking at what they know since 2012. Well, that doesn't mean it's going to continue. I hope it does.
Yeah, yeah. Wow. This has been an amazing conversation, Jack.
I don't know if it comes up, but I'm very passionate about, and I generally love what I do, and I love working with people, and I love the business.
I love it. I love it. I love it. Any 2 cents for angel investors that are listening? Aside from buy and hold, that's probably the most important nugget of this.
Buy good stuff, and buy good stuff and forget about it. Move on to the next deal.
How do you know if it's good?
You can tell by location. Today it's
Are,
funny.
are there any key metrics, if you will? That's what I'm asking for.
I think so. I think so. You look at the demographics, you look at the neighborhoods, you look at the states. You look out. I'd be very skeptical about a lot of these deals that are priced to perfection when you see these offering memorandums and they have these projections. Rents are going to keep going up forever.
Yeah.
And they're going to refinance every 2 3 years. Rates are going to never go up. Again, you have to have big capital reserves. You have to have good leverage on it, and that'll protect you.
Got it. Got it.
It's really ultimately you don't need. Look, I'm a moron. Okay, you don't need to be that smart to do good in this business.
Correct.
So I tell people, don't try to outsmart yourself. Just buy good quality real estate. get long-term debt on it, pay off the debt every month. Every month, pay off that debt.
I know we're coming to the closing time here, but bridge versus fixed debt?
It all depends. We're bridge lenders, so I'm an advocate for bridge lending,
Yeah,
and I have my shameless promotional sign behind us.
yeah.
But bridge is a tool, and permanent debt's a tool. They're all tools that you need to keep in the tool chest and use them at the appropriate time.
So for buy and hold, it would be
Permanent debt,
there it is.
but you may need the bridge to close quick.
Correct, correct.
So a lot of times, like we just closed last week, a bridge to agency. Someone was buying I think a 31 unit or 49 unit in Chicago.
Correct.
They're going with the Freddie Mac agency multifamily,
Yeah.
but the agency couldn't close in time. So we came in with bridge, and they'll pay us off with the Freddie Mac debt. So it's a tool.
Awesome, awesome. Thank you very much again for being on this show, Jack. How can people best reach you?
You're welcome to go to Gelt Financial, GELT financial.com.
Okay. Can they reach you via email at all or LinkedIn?
100% Jack Miller at geltfinancial.com.
Yep. And then this is his LinkedIn. It's /H Jack Miller for those that are interested. Thank you very much, Jack. And I really, really appreciate your time and expertise.
I enjoyed it, but you got to promise you'll give me an update. I want to hear your progress.
I will. Thank you. Thank you.
I'm betting on you.
I appreciate it. Buy and hold strategy for sure. I'll end the stream now.